Financial crimes are very popular among far-right extremists. Over 600 financial crime schemes were committed over a 23-year period by over 1,300 perpetrators. And this only counts those who were indicted, not their unindicted co-conspirators. 40% of them were sovereign citizens, about a fourth were tax protesters, and another 20% were collaborators where no evidence was found that they held a far-right ideology. They seemingly engaged in these schemes for financial gain or profit. By far their most prominent financial crime schemes were ideologically motivated tax avoidance carried out as a form of anti-government protest. Most of these tax avoidance schemes involve various what have been termed frivolous arguments about tax laws and the U.S. Constitution, all of which speak to the perpetrators' beliefs that they are not morally and legally obligated to pay taxes, arguing that tax laws, and most other laws really, are unconstitutional, illegal, invalid, or voluntary. All of these frivolous tax arguments have been repeatedly rejected by the courts. These schemes utilize a wide array of techniques, some of which include stopping tax withholdings, hiding income or funneling it through a shell company, refusing to file tax documents, or submitting false tax documents, such as writing in 0 for all the fields to make it look like you have no income. Many schemes also involve the sale and purchase of anti-tax packages, where those looking to avoid taxes were charged extravagant fees and provided fake documentation, instructions on how to file false tax documents, and in some cases, fake financial instruments to satisfy existing debts. Tax avoidance schemes are closely tied with banking fraud, typically check or loan fraud, to obtain funds, pay off debts, or just to disrupt the financial system. Check fraud typically consists of fake, often self-manufactured checks, money orders, or other similar financial instruments, such as fake comptroller's warrants used by the Montana Freemen. Loan fraud, including mortgage and real estate fraud, is when false information is used to obtain a bank loan, which they then refuse to repay. Non-existent persons or other shell companies are also used both to obtain the money and make it harder to trace and recover. A popular one that's been around for many years is known as the redemption or Strawman scheme, which essentially claims that either after the 1913 creation of the Federal Reserve or the 1933 abandonment of the gold standard, the specifics vary, but ever since then, the U.S. Treasury has created secret bank accounts for each U.S. citizen, called a strawman, that can be utilized by citizens to pay taxes and other debts through the use of fake financial instruments, often fake U.S. Treasury checks or bonds, known also as sight drafts or bills of exchange. There are also investment fraud schemes. Some are Ponzi schemes, promising excessive returns for investments, but using the money to pay the originators of the scheme, or pyramid schemes, where there is first buy-in to a fake product, such as a tax avoidance or debt elimination package, where there is an incentive for making money by getting more people to join in selling them the packages, and of course, the fees to join and stay involved primarily funnel their way up to the top of the pyramid. Similar to the redemption scheme was a scheme that operated nationwide in the mid-1990s, which claimed a secret U.S. Supreme Court ruling had declared the Federal Reserve bankrupt and required them to pay $20 million to every U.S. citizen. Those who wanted the money had to file a claim through the perpetrators, who claimed to be administering the settlement, and of course, invest a $300 filing fee. Then there's money laundering, which has always been popular. The goal is to make illegally obtained funds appear to have been acquired legally. There are numerous money laundering techniques, funneling dirty money through a legitimate business or a front or shell company. They could also falsify loans or invoices for exports and imports of other purchases, or overstate the value of real estate and other properties. Money laundering has been used by far-right extremists to launder their dirty money, such as trafficking narcotics. Also popular among far-right extremists are the filing of false liens and other documents. If you get a bank loan for a car or a house, the bank files a lien on it until the loan is paid off. If you fail to pay the loan back, the bank can seize the property. Virtually anyone can file a lien, though, with a county clerk, and this is something that far-right extremists have taken advantage of by filing false liens against government officials and others who oppose them by claiming an interest in their personal property. Typically, these fake liens are abnormally excessive, in the millions or even billions of dollars, and are often filed to retaliate against or to intimidate those who they feel have wronged them in some way, including criminal justice officials carrying out their lawful duties. Far-right extremists have also committed numerous other types of financial crimes as well, such as identity theft, insurance fraud, embezzlement, counterfeiting of both currency and consumer products, credit card fraud, and cybercrime. Although these types of financial crimes don't receive as much attention as violent crimes, they're far more prevalent than violence. It's much easier to talk somebody into accepting a scheme to stop paying their taxes than, say, take up arms against the government. And they've caused tremendous harm. easily reaching upwards of $1 billion in damages, with thousands upon thousands of victims. And they are often the entry points for further radicalization that eventually leads to violence down the road, as their commitment to the far-right extremist cause solidifies.